Ladies and gentlemen, please turn your attention to the stage as we begin our session.
All right. Good morning, everybody. Thank you for joining us. I am surrounded by some of the best and brightest minds in the FinTech space, plus one of my favorite mega banks here in the United States. We are very excited to be here at Milken, which, as everybody knows, over the years has become a tremendous success and the hottest ticket, arguably, in business. We are honored to be leading one of the more interesting topics, I would argue, at the conference. And granted, I am biased, and I also know that we are competing again, going head-to-head against the Avengers. So if my two boys would be here, they'd say, "Dad, I love you, but it's the Avengers." But from our side, what we're going to be talking about is reinventing, and more specifically, revolutionizing the financial industry. So I'm proud to be joined here with our 5 panelists. Starting to my right is Asheesh Birla, Senior Vice President at Ripple. And as most of you know, Ripple is one of the most exciting global payments companies using blockchain, with a very meaningful interest also in one of the top digital currencies. And Asheesh and his team have told me that it's very interesting to think about how our financial system works today, whereby it's crazy. You can put money on a plane from JFK to London, and that is faster than using our current payment rails. Asheesh is a fellow Wharton grad, joined Ripple in 2013, and in 15 years ago, or before he joined Ripple, 15 years ago, sold one of his businesses to Thomson Reuters. So that's Asheesh. Asheesh, thank you for being here. Also to my right is Christian Lanng, CEO and co-founder of Tradeshift. Tradeshift is a supply chains, payments, and marketplace platform with 1.5 million customers across 190 countries. Christian is also another whiz kid. At 19, sold his first company. At 27, he and his co-founders founded Tradeshift. And one of the fun facts is that Christian learned English from a movie from Bruce Willis. So Christian, welcome. And now to Simon Paris, CEO of Finastra. Finastra is the 3rd largest FinTech company in the world, builds and deploys technology and software architecture and cloud ecosystems, has 1.9 billion of revenue, 10,000 employees, 9,000 customers, and includes clients that are 90 of the top 100 banks globally. Simon's fun fact, passion is family and classic cars.
There you go.
Classic cars. To my left more is John Shrewsberry, CFO at Wells Fargo. Some fun facts about Wells. Has one of the largest banks, one of the largest balance sheets, $2 trillion, 260,000 employees. In 2015, Wells Fargo had the largest market cap of all banks on the planet. We look forward to that title being returned. John is a 26-year veteran of banking, and actually in 2006 to 2014 ran investment banking at Wells. And finally, Josh Stein, CEO, co-founder at Harbor. Harbor is an all-in-one platform for digital securities with one of the main goals of using blockchain to raise capital faster, cheaper, and easier. Josh previously was general counsel, chief compliance officer at Zenefits, and an assistant U.S. Attorney General, and most impressive to me was also an intelligence officer in the U.S. Army. So welcome, Josh. All right, so now, and to myself, I've been an investment banker for 20 years. I currently oversee the financial institutions business at Jefferies. So now starting on our topic, when I personally think about the industry and my career, today is one of the more exciting times with regard to technology, in the financial space. I'll give you guys 3 stats to start, then we'll bring in the panel. 3 stats to start. 5 years ago, FinTech made up 5% of the personal loan market. Today, FinTech is 38%. Fact number 2, I'm going to focus on Bank of America. Bank of America has the largest deposit base in the country, $1.4 trillion. Wells has $1.3 trillion. At B of A, 77% of its deposits are digital. That's point number 2. Point number 3, and this is recently reported in the Wall Street Journal. So bringing in another fintech into this conversation, PayPal's Venmo has 40 million active users. Number 2, only the JP Morgan, whereby the 40 against B of A is 37. And Wells is actually 30 million digital. So you have a fintech with a very, very nice and impressive showing. So our view and my view is that traditional finance players that ignore what's happening with regard to technology really pose the risk of being left behind. So that's just to start. Now to bring in our panel and think about some macro questions first, if I may. And I'm going to start with John. John, please describe one of the most tangible, relatable change in technologies that you think will happen in our financial system over the next 10 years that has nothing to do with Wells Fargo.
Sure. I think it's happening right now in financial services and in other industries. But the familiarity of all of our customers, both consumer and commercial, with technology in their daily lives and the expectations that ratchets up means that what's happening today, which I think will continue to accelerate, is that every interaction that we have with financial services will become more intuitive. It'll become more personalized, more contextual, more data-driven, much more opportunity for self-serve and automation, and a lot of the hassle factor that in some ways defines legacy financial services will start to melt away. I think people are getting more used to it. I think from an incumbent's perspective, we're delivering it faster and faster all the time because the commercial opportunity is really big. And if you look down the road 5 or 10 years, I think people will think about the historic way of exchanging paper and banking like we all think about the fax machine and other things that have come before us that never made any sense and slowed us down. So I feel like that's the path that we're on.
Thank you. Josh, what's your view?
I think you're going to see the continued digitization and automation of a lot of different functions that used to be done manually in paper. I think a great example, you talked about payments and how everybody interacts with cash for the most part digitally now, whether that's with online through bank payments or new tech like Venmo or PayPal back in the day. I think you'll continue to see that, but then you'll see continued cutting of price points as costs get cut. And a good example is personal wealth management, where you have Betterment and Wealthfront and others that introduced the robo-advisors and brought costs from well over a point down to 25 bips or less.
And same question with regard to tangible and relatable change in technology in the financial space, but more specifically with regard to your company, Christian?
Yes, I think what we're seeing happening, and I think that both goes broadly in for our domain, right? So we deal with enterprise payments, which you mentioned fax. I mean, there's still a lot of fax and supply chains around the world. So if you think checks and other things are outdated, I think what's happening is we'll see moving away from banks building better and better tech to do what banks have done for the last 100 years better, to services being built from scratch to service a new software ecosystem, right? And it's already happened in consumer and e-commerce. Look at what Amazon is doing. They're building their own container ships now. Why? Because they know how to build a container ship better than the guys who used to do it. And I think we interact with a lot of banks. We have a lot of banks that are partners, but the speed that they can develop new products at and the speed they can leverage new data sources into those products is just too slow. And when we look at the market, we move around $650 billion, mostly between companies who all want financing. We, of course, want to go and address the biggest possible part of that market. So I think it's a flip over from banks building better services to, and they will still continue to do that for their constituents and for their customers, but to those who own the customers to start building their own products because they simply cannot keep up with the speed and innovation. You've already seen this in China full blown. WeChat, zero fee payment rails with a whole app ecosystem on top. So I think for our space, exactly what's happening right now.
And Asheesh, what's your view on Ripple there?
Yeah, so what we're seeing is this trend, especially in Asia and Latin America, of folks moving from cash to digital. And those are really hot markets for Ripple. We're signing up tons of customers there. But I think we're doing it in conjunction with the most innovative banks. And so I think that in Silicon Valley, there's this thing that banks are going to be dead. We disagree. We think that especially in emerging markets, some of the banks out there are moving faster than a lot of fintechs. And so we're building a new payment network built on blockchain, but we're bringing together the most innovative financial institutions around the world to make that happen.
All right, so now to get to a very big topic, not only in finance, but just broadly speaking, but we'll stay within finance. What scares you most with regard to tech in finance if it's not appropriately managed, Simon?
Yeah, so I guess from our perspective, probably two things. One is the never-ending requirement to keep trust. And it was frightening yesterday to hear people talking about that many people trust their social media account more than they trust their bank. That's kind of alarming. And the other is not seeing this bridge between the two sides of this conversation. So on the left-hand side, you heard John and Josh talking about digitization and digitalization, the role of context and the role of customer expectation. And on the right-hand side, you talked about open ecosystems and open software and next-generation technologies to enable exactly that. And that's kind of what I guess we do in the middle.
And Josh, how about you?
I think sometimes technology increases the velocity and it increases the amount of financial products you can get out there. And I think sometimes it becomes a substitute or a cover for judgment. I mean, the need for due diligence and proper judgment in the creation and placement of and use of financial products doesn't go away. In some ways, it becomes even more important in a world in which you've automated away a lot of the busy work.
All right, John, to bring you into it, with regard to the threat of big tech, Amazon, Apple, Facebook, Google, a lot of the larger financial institutions and some of the smaller mid-sized FinTech companies are wondering what type of role will those large tech organizations have within finance? What's your view? How do you see this unfolding?
Well, they already have a big role because they set customer expectations for ease of use, for the things that I mentioned earlier in terms of the contextual customer experience and things that are really intuitive ways of doing business or interacting that we've all been trained to expect. And so in that sense, they've set the bar. To the extent that they're promoting or involving themselves in financial services, either to pick up the pace of their own commerce, to make it easier for people to buy what they're selling, there's great partnership opportunities. And in some cases, they may even try and go it alone themselves. We haven't seen, I guess we're seeing it in data privacy, but we haven't yet seen the role of the regulator as it applies to those types of scale operations when they move into areas that have either existing financial services regulation attached to them. I'll be curious to see how those things react from both sides when it happens, because they're deep pocketed and they're very influential. And I think what happens with data privacy could be a marker for what happens down the road with respect to their role in financial services. So right now we view them as partners, big partners, a lot of big opportunity. We're embedding payments in their activities with them. You've seen other industry partnerships with credit cards, et cetera. So there's a lot of opportunity. And of course, in the case of at least one of those names, they're a big provider, or a couple of those names, they're big providers of compute power, analytics, and other things to financial services as a vendor as well.
Asheesh, how do you think about big tech and their entry?
Yeah, so what's interesting is that we did a lot of research in terms of what was broken with the financial system and the payment system, and we went out and visited with Uber and Airbnb and Google and the others. And what I realized is that these firms, we think of them as tech firms, but a large part of what they do and the value they provide are payments. And I went to Uber and they have 200 people working specifically on payments, and that's because the current system doesn't work for them. So they rebuilt a payment system using 200 people all around the world. Amazon, for example, has 206 different payment connections to facilitate merchant payouts for their platform. And so, they're pushing innovation. And I don't think that they should be in the payment business. I think that they should use, other technologies instead of, and focusing on what they're really good at. And so, their role right now has been to push innovation, and I think that's a good thing. But in the future, we're hoping that there's other solutions like the ones Ripple provides so that they don't have to get in that business themselves.
So Simon, when you think about these players that I mentioned before on the big tech side, can you help the audience differentiate who's going to potentially get it right, who's going to potentially not get it right, who's going to lean in harder versus others on the big tech names?
Yeah, so two thoughts. One is there are two players we never mention, and we should start to mention them. One is Ping An, and the other is Alibaba. Yeah. So Ping An has become 1.7 million employees and a top 10 global market cap company, and Alibaba is already handling 30% of the payments in China. Right? It's extraordinary. Now, the way to think about it maybe is building on what Asheesh was saying, which is to look at the ethos of the company. If you look at the ethos of Google, they want the data surrounding the transaction to encourage advertising. If you look at the ethos of, say, Amazon, they want the data around the transaction to spur the next transaction. So when you think about are they a threat or a foe, friend or foe, I think looking at the ethos of the company is relevant. In our case, we chose very deliberately, because of that, to partner heavily with Microsoft. They're not looking to compete with your model, they're looking to enable it. So I think looking at the ethos will guide you well.
I think, can I just make one comment?
Please.
Because I think it's rather naive to think that Apple and Google and Amazon is not going to try to own the whole stack. I mean, today they built their own network equipment.
That's the point, yeah.
5 years ago, people were selling them network equipment and thought it was going to be a big market. They even make their own network cables. They have a tendency to own everything that's below them to deliver value to their customer, and they've done that over and over and over. I don't think finance is going to be a lot different.
Yeah, I think it's important to choose your friends wisely, exactly to your point. Yeah.
Agreed. John, thinking about, again, staying on the theme of big tech and thinking about the obstacles. So thinking about the obstacles, clearly what jumps to the top of my head is regulatory. Not you. Over my years, I've heard a lot of my friends in your seats, plus or minus, think about the regulatory moat that may or may not exist in the U.S. On the regulatory side. But when you think about the bigger names that we're talking to on the tech side, what are the more significant obstacles you think they would face as they try and poke and prod into the financial space? For you, John.
Oh,
Sorry.
sure. Well, they're going to have, there's an array of consumer compliance related topics that eventually, I mentioned the data privacy issue first because that's where it seems to be popping up, but to the extent that they either major or minor in financial services, I think they're going to get a different dose of that, which may be totally appropriate. This question of whether they're friend or foe, whether they're your partner or your competitor, is one that we all have to grapple with in the relationships that we have. But they're going to have to navigate that as carefully as they choose to. Sometimes they're really good about that, and sometimes they're very heavy-handed, depending on which one that you're talking about. But I think they're going to have to get that exactly right. I also think that we're at the end of 10 plus years of relative prosperity and expanding economy and no real risk in the financial system in the sense that the last financial downturn presented. And once that reintroduces itself, inevitably in the next couple of years or whenever it happens, it's going to really pressure test some of these desires to be in financial services because not just fraud and cybersecurity, which are prevalent. We haven't mentioned them yet, but they're probably the biggest risks in these businesses these days. But for people who are minoring and lending, for example, it's been a very benign environment, and we're about to go into a tougher time. So I think they're going to have a durable model through the cycle and still feel good about it on the other side, given whatever impact they have on their customers as we go through that cycle.
So just to switch gears a little, I'm going to focus on my immediate left and right. We are fortunate to have and obviously with others, but more specifically on the gentleman to my left and right, a global perspective, a global panel with regard to look and reach. Asheesh, I know you're there, but I'm going to focus also on Christian and Simon. When you think about the other countries, when you think about what tech is doing right, doing wrong, and compare it to the U.S., so just give us that global perspective. Maybe Simon, starting with you, and then turning it to Christian. Can you educate us a little on that viewpoint?
Sure. In fact, if you don't mind, what I'll do is I'll build on what John was saying. There was a wonderful story where regulation meets fintech, and it happened in London, where I reside. And the regulator was obsessed about this regulation called PSD2 and said PSD2 is all about opening up the account information services and the payment information services. And to my right was a fintech who was just shaking his head like this. And I said, and I was moderating the panel. I said, so why do you disagree with the intent? And the fintech said, look, if I'm buying a home, then my journey, my customer journey, the expectation that I want my institution to fulfill is I want them to guide me on the zip code that I should buy the home in, the price of the property, the right mortgage for me, the life insurance and the house insurance, and when I get to the home, optimize my utility bills. But here's the point. Not one of those products or services necessarily came from the bank. The bank should assemble it for me. That is the point of PSD2. And you could see the regulator have this epiphany moment, realizing that it was to fulfill the expectation, to fulfill the choice. So that was very interesting. Open banking is the phrase that it hides behind now.
Interesting.
Yeah, I agree very much with that point. I mean, especially European and the London regulator has been very, very good at combining fintech and regulation. It's clear that the banks, they thought open banking meant they had to give access to others, and I think they're figuring out it actually means that they need to incorporate others. Exactly. So I think it's going the other way than they necessarily thought. I think to give a global perspective, right, I think it's hard to understand how far ahead, for instance, China is in fintech. You mentioned Ping An. I mean, Tencent has 90% of mobile payments in China. If you go to the streets of Beijing, you will see beggars who hold QR codes to be paid because nobody has cash. So they're so far ahead, and they're building microservices on top of that platform. You can do on-the-fly second lending to buy a smartphone from your chat app. For a consumer in the US, where I had to Google, I had to go on YouTube to figure out how to write a check when I moved here, because I had absolutely no idea how to do this. It was really arcane. I think China looks a lot more like the future, right? And in Europe, I think some of the systems are really, really far ahead. Of course, money transfer, all of these things. But I think there it's the regulatory landscape that's extremely complex, right? So lending, finance, all of these things. But it's going to be very interesting to see, I think. Again, Asia is probably the biggest opportunity in the world. Southeast Asia especially is growing dramatically. And it's going to be interesting also to see what happens when the so-called trade war ends. If one of the things that's going to happen is more access or less access to China, for sure. We've been there for many years, but that's something we're watching very closely. But the opportunity is tremendous.
Yeah, just to add to that, as it relates to blockchain, Southeast Asia has taken a leadership position from a regulatory perspective in regulating blockchain. And the PayPal of Thailand, for example, offers cryptocurrencies in its wallet. You can use cryptocurrencies for remittances in those countries, and it's dropped the cost of remittances. And so you're seeing them use regulation as a platform for innovation. And I think that the U.S. has got to catch up here. I think that we took a leadership position in regulating the internet. And we benefited greatly from that, but that's not the same position we're taking right now with blockchain. And so I think that's been taken a little bit with Asia right now, and especially Japan, Singapore, and Thailand leading the way.
All right, to flip again. So Simon, I'm going to come back to you. So how big is big enough? That's the question. How big is big enough? So if you think about the U.S. banking system, the top 25 banks currently control about 72% of the deposits today. 10 years ago, that 72 number was smaller at 57. So this is a theme I privately, with friends of mine in the industry, rightly or wrongly, call it the deposit suck that is happening. If you look at the trends of deposits and where they sit, they tend to sit at the larger financial institutions. So now back to the original question of how big does a bank need to be to compete with that? And how big does their tech budget need to be? If you think about one of the most critical aspect, the lifeline of a financial institution, which is liquidity, which is deposits. So what's the right sizing now going into this next phase of the bank of the future?
Yeah, it's actually an interesting question. We serve banks, right? So they're our customers, and we have about 5,000 institutions in the United States as customers. So we go from the very large banks like Wells Fargo, who are a customer, all the way through the community banks, credit unions, and trusts. And what you see is a non-obvious answer. The smaller the institution, the less IT capacity they have, even to having no IT staff at all, which means they are the first to embrace cloud, they are the first to embrace innovation, they're the first to embrace digital, and they are surprisingly leapfrogging ahead in terms of their technology. The largest banks have this incumbent, complex legacy architecture, which is very hard to break. It's very hard to break. So it's almost ironic. Now you are seeing the deposits suck, but you're also seeing shadow banking and peer-to-peer and lots of non-regulated, non-bank activity. What I worry about in this country, and I'm not an American, so I'm not qualified to answer, but what I worry about is the role of community banks in the fabric of your country is quite important. So to see those decline, they will consolidate, which is a different point, but to see them evaporate would be a shame.
John, I know this is a tricky question, but do you have a perspective on that question, with not away from Wells, with regard to just the size of a bank competitor in the U.S., how big they would need to be given the wins and the competitive dynamic of tech?
I think it depends on what their business model is. I think if you want to serve everybody, so that is our business model. We have a huge mass market footprint with 70 million customers. It helps to have a big budget because you want to be as innovative in multiple products and capabilities as you can. There are other banks, there are good examples of smaller banks who really focus on some other value proposition, not trying to be everything for everybody, but for example, focusing on the affluent or high net worth customer, or focusing on what their niche is. I do think that as concentrated as you mentioned, we're still extremely fragmented in banking in this country compared to most other developed countries, and it's going to be really hard for a lot of those folks in the middle who haven't defined themselves in some specific way to keep up. And it's part of it is meeting customer expectations, and part of it is cost and taking it out, using technology to take other legacy costs out, and part of it is security, right? Which is very expensive, and the better you are at some of the things we mentioned earlier in terms of really digitizing end-to-end activity, really using data powerfully, the more of a target you become for people who are looking to separate you from your data or your customers' data, and so you need a budget for that as well. And so I think it's going to be tough for people in the middle to keep up with that.
Yeah, no, understood. Josh, to turn it to you again, just to showcase Harbor a little. In 3 bullet points, tell us where the business is today. What is the grand vision for the future for the business, and how long will it take you to get there?
Sure. Harbor today is working with roughly half a dozen clients, mostly in the real estate industry, real estate funds and debt. We are a software platform to make private placements far more efficient, onboard and vet the investor, control the flow of documents, and control the flow of funds that allows people to syndicate more widely and tap investors around the world in a way that was logistically difficult. And then we're a blockchain protocol that enables liquidity, essentially digitizes those LP interests or shares so that they can be easily traded, creating a marketplace in private placements, private securities that today is in large part impeded by the lack of technology. Our vision is down the road is that you start to see real liquidity, not like the public markets, but real active marketplaces in private debt, in private placements that today just doesn't exist.
So John, coming back to, and you don't have to answer this, but I do want to pivot from what you said.
This is going to be good, whatever it is.
I certainly hope so. This is a friend or foe conversation, right? This is a friend or foe and a friendly conversation up top. But instead of talking about for us now where the banks will get along kumbaya with regard to the fintechs, if we think about, and maybe Christian, you answer this if I may, but if you think about where the banks will not work well with fintechs, I mean, one that immediately comes to my mind is when I think about mega banks and I think about mega tech, I think about who owns that relationship. I don't know if that's the easiest the conversation, if you extrapolate that through with regard to who owns the relationship. I think you have a lot of wonderful big banks out there, a lot of wonderful large FIG institutions, and you have a lot of wonderful tech companies that want to own that. Where do you see the friction occurring?
I mean, that's very simple. Who owns the end customer, right? And the banks, they have a huge branch network. They have their websites. They used to think about their portals and their websites as a destination point, and I think it's pretty much over. I mean, as a sort of younger person, the times I want to log into my online banking is 0. I prefer never to see it, never to touch it. I have to. I think what we're seeing right now, I mentioned China as a model, you see the bank services being embedded in other protocols, other software, other platforms, where they're much closer to the consumer. I think that's really the future, but that requires a re-architecting of a lot of the bank infrastructure where they almost have moved in the other direction the last 5-6 years. So we're seeing more opening up. So I think there's going to be a huge battle for who owns the end user, right? I mean, in my case, just for what we do in Tradeshift, right, we own the transactional data up and down the supply chain process, the purchase orders, invoices, payments, etc. So we have a huge depth of data, and we sit right in that flow. We present an invoice to a seller and say, you're about to be paid in 90 days, would you rather be paid now? Whenever we work with the banks and we go into those relationships and we drive a lot of SCF, like supply chain financing from the banks, they start by thinking they own everything about that relationship. But I say, hey, I come to the equation with opportunity, with more data, and with the relationship between the buyer and the seller. So can we have a different talk about how this works? And we would like to create products that are a lot more elegant. And I think right now, for instance, a lot of these products, also because they're based on the bank's algorithms, the way they think about risk, are not priced right either, just because they haven't had access to real-time data. So I think that's going to be another huge battle. How are we pricing risk? How are we pricing all of these things? Because that data have never existed before. We have 100 times the data we have today than we had 5 years ago. So I think those are some of the areas where there are going to be a lot of battles up and down the stack. And of course, different players are going to partner at different levels and maybe even fight out others, because these are big battles, right? So
So Asheesh, to bring you into it, again, under the theme of where the rub is going to be, I won't talk about Wells, I'll talk about B of A. You probably saw some recent comments out of B of A with regard to, quote, significant doubt around blockchain. Any perspective from you on either those comments or just generally on some of the naysayers, specifically around blockchain, that you can share with us?
Yeah, so I mean, Bank of America might be one case, but we have seen big mega banks adopt blockchain. Santander is one of our largest customers. They have created a very innovative remittance app, all on top of blockchain, and that's brought a lot of new customers back to the bank that they were otherwise losing to fintechs. And so you are going to see some banks take off. I think two things have to happen. One, they have to identify the right kind of use case that blockchain is going to be transformative for them for. Those tend to be low-value remittances or e-commerce payments. The bank has to be really interested in going after those kinds of payments. And the second thing, in terms of the United States, I think the regulation has to be clear as well. And so far, it hasn't been very clear, and I don't think any large mega bank in the United States is going to jump 2 feet in until that becomes clear, and we're hoping that'll work itself out over the next year or so.
Josh, do you think banks one day will, if needed, again, we're here, there are some public comments that we're talking about with regard to the value of blockchain, et cetera, that we'll get into a little later. But if needed one day, if blockchain is the hottest thing since sliced bread, will banks just come in and find an alternative solution, a different solution, given the power that they have across the financial system? How do you think about the banks and their potential reaction if it's as big as we hope it would be?
Yeah, it's a technology that's applicable across a number of things that banks or others might do. I think what's more interesting is we make it more specific. Think about it in terms of digital currencies like the JP Morgan coin or the JP Morgan digital dollar. I think it's very difficult for a bank to then take that over because the other banks are not going to be incentivized. I mean, I know Wells Fargo, I would assume, would not be really gung-ho on adopting the JP Morgan coin. Right. And so if each bank has its own competing currency, then you just end up with this balkanized system that makes it very difficult. So what I think you'll see is the rise of players who are outside of those systems who can be neutral platforms, neutral players that can then service and integrate a lot of the banks and legacy financial players.
You want to say something?
Yeah, I really want to say something. I think, blockchain is about as meaningful to talk about as a technology as to say database. It doesn't really matter, to be blunt. And I think, unfortunately, at finance conferences like this, we talk way too little about how it performs on the tech level. It's not a particularly well-performing technology at most of the use cases you would want to use it for. There are select use cases it's brilliant at, and then 90% of the other use cases you'd be better off using a database. And I think the last thing, and this is probably the biggest promise of blockchain, is decentralization. At least in the B2B space, there's almost no demand for decentralization. If I went to my large Fortune 500 customers and say, hey, we'll decentralize your supply chain payments, like, what does that mean? It means, well, if we wire the money, we have no recourse. If something goes wrong, if it's fraud, whatever, they would say, no, thank you, please. We want one neck we can sue if something goes wrong. So I think among end consumers and among companies, there's very, very little sort of demand for decentralization of your financial services. So I think that's sort of a very ideological project. But I do think for remittances, for instance, there's a huge use case. It's a market that's way underserved. I think for underbanked, you're looking at a lot of Asia and elsewhere. I think there's huge potential. But the amount of hype it has right now within core services, I saw, like, they would talk about supply chain finance being the next use case for blockchain. I think there's a lot of blockchain companies who raised a lot of money and are looking for a business case, and now they found this, and I think they're going to be really, really disappointed when they figure out that we don't really need that particular technology to solve that problem.
Yeah, I mean, I think the one thing that's really interesting about the JPM coin is that it's essentially just a database rebranded as a blockchain. I mean, there's really no inherent need for using a blockchain for that. But I think it does go back down to use cases. Remittances is one. The other great use case for blockchain is we have a company that is sending e-commerce payments internationally. They are now able to send their freelancer payments multiple times per week, $10 a payment. There is no other technology, in my opinion, that can do that in the speed that we need and the cost that we need, other than using this technology.
But that's just not true. Most European countries have instantaneous money transfers.
That's on the domestic side, and so an international payment without.
But the technology exists. That's the point. It exists.
And it's a lot faster to use blockchain technology specifically for those kinds of use cases, just like remittances as well.
It really isn't. But yeah.
So. Everybody, we practiced that outside. I thought that worked perfectly.
That's good enough. That's what you want.
We're actually neighbors in Silicon Valley.
Yeah, maybe not
this over lunch.
Yeah.
All right. So if I may, I want to, Simon, I'm going to come back to you on cloud. I'm going to change the topic now to cloud, just so we work through appropriately on time. So, being a U.S. guy roaming around the U.S., if I told you the number of financial institutions, banks that actually have their core system on the cloud, I probably couldn't use all my fingers here, and we have 5,000 banks. Can you talk about the cloud as a core, benefits, costs, et cetera?
Yep. In fact, you wouldn't be able to use the fingers on your two hands. In fact, you wouldn't be able to use the fingers on all the hands in this room. We now have 3,000 institutions in the United States who run their core systems on cloud. It has moved so quickly. To give you a context, in the last 18 months, our relationship has gone from being irrelevant with Microsoft to being the 31st largest consumer of Azure in the world, any industry, any size. 1,400 mortgage customers, core system, operating a single code line on Azure with their data co-located with infinite compute. That allows those small banks, the larger banks, of which we have many in the United States, are slower on this, but that allows you to co-locate infinite, large data with infinite compute, and the ability for you to see through the data and pay that back in services to your customers is really surprising. And this is in 18 months. Yeah. By the end of this fiscal year, which for us is not calendar, we believe we'll be at 5,000 on cloud.
Wow.
Already at 3.
All right, so I'm going to try to bring John into this too, but maybe, Simon, if you don't mind just starting it again. When I think about cloud, I do think about security.
Yep.
There's a little bit of fear in some of that. Can you talk us through that aspect of security, utilizing cloud specifically for financial data? And then I'm going to ask John his perspective just broadly with regard to security.
Yeah, absolutely. So when we think about security, it doesn't really matter how large we become, we still have the economy of scale of 1. It is really hard to compete with a Microsoft on security spend. It is really hard to have the reach that they have with the regulators across the 70 jurisdictions where cloud services are now fully embedded. So that was one of the arguments for us to actually go to cloud. Much greater levels of security than we could achieve alone, is point 1. And then point 2, the primary purpose of cloud is, of course, the speed of innovation. People go to lower cost or converting CapEx into OpEx, but it's not the point. The point is the innovation flywheel is so much faster when everyone is on one code line in one location that you can drop innovation into.
So John, on that guise of cloud, but also if I may have a sub-bullet with regard to FinTech and securities, again, Wells Fargo is one of the best out there with regard to protecting client data. I know it, we all know it. Tremendous amount of money spent on that. But then thinking about now the cloud technology, but also the FinTech players and entering into the FinTech, how do you think about security for the industry?
Yeah, well, we think about it the same way that we think about it if we were doing it ourselves, which is that we need to really understand what our FinTech vendor partner relationships are doing in their own risk management programs, code reviews, pen testing, really understanding that what they're doing is the same as what they're saying. Some of the names we've been throwing around are at such a scale with such capability that it's never really in doubt. But there's a range of FinTech partners that we have. Some, in fact, some of the most innovative are the type that when you partner with them, you have to assume they go bankrupt because most of them will, right? And they may have something that's really valuable that we want to utilize to take into our own development. But you can't rely on the fact that they do everything well and that they'll always be there. So we basically we superimpose our own capability on top of them. With respect to the bigger guys, we trust but verify. Yeah. We're not really that trusting, but we verify a lot. We verify.
No, you're not
frequently, and that's because we have ultimately all of the monetary downside, let alone the reputational issues that come on top of it. But most of the biggest partners that we work with, really have very little to lose other than their own carefully guarded reputations. But when it comes to our customers' assets or information, we own that. So we think about cloud in our own environment. We've got We're a big Azure user for our own private cloud. We're a pivotal Cloud Foundry user on the other side for Java development, and we've lifted and shifted a lot of our legacy applications from our own distributed servers into these cloud environments, really to get that comparability across the stack up to a certain level where historically, as you can imagine, we had tens of thousands of developers or technology owners doing things in different ways for different businesses at different points in time. So migrating to the cloud has taken costs down, is making consistency more of an expectation, and it creates a better stepping off point for development in the future. We're a SaaS user like others. Salesforce, for example, is a good example where our customer data does end up in the public cloud, and we figured out how to get comfortable with that. We are increasingly looking for the AWS or Google types of relationships for burst, unlimited compute capability when we need it on top of our own hardware. So, and the future will be only increasingly more so.
All right, great. Now to talk about another very easy, friendly topic, if I may, politics. So obviously we're entering the Super Bowl for 2020. Josh, I'm going to go to you. To start, when you think about what changes, good, bad, or indifferent with regard to the current administration and how it's either impacted your business and or businesses like yours, can you give us a perspective on that?
Sure. I think what's been surprising is it's had virtually no impact. If you think of the blockchain industry generally, Asheesh brought up that for some aspects of it, there's regulatory uncertainty, and the SEC has not been moving forward in a way, say, regulators in Singapore or elsewhere have. And so what you've just seen is these bureaucracies operating at their traditional speeds. We have talked with the SEC and FINRA and others, and the point of view from the regulatory agencies is they feel like they're moving faster than they've ever moved before. And from the point of view of a technology industry, that pace feels glacial. And so I think, if you think of the Trump administration, it is business as usual for those of us in the financial industry, the financial tech industry.
So, John, if we shifted back to democratic control of houses and or the top seat, any perspective that you can share with regard to the financial industry?
Yeah, as Josh said, things haven't changed that much in the last few years. So it depends on what the mandate is coming out of that next election. If it's specifically focused on this nexus between innovation and financial services, maybe that could be a launch point for something more innovative. Those of us who have been here, or businesses that have been here through a couple of political cycles, have figured out how to succeed in any political environment. So I'm not so worried about that. One thing that's worth mentioning, though, I think one of the regulatory issues that those in the blockchain or cryptocurrency area have been reckoning with even more so really is anti-money laundering types of regulation, which is what makes the U.S. stand out maybe so much versus other developing or developed economies. And that is no different in this environment than it was in the prior political environment. There's still just as much of a focus and tension on knowing who is paying whom, internally and across borders to make sure that the policy and law enforcement objectives are being met. So that's not relaxed in this environment, and I wouldn't expect it to be any more lax for the benefit of your innovation in the next if there is a regime change.
Okay, and politics obviously clearly influences regulation. All financial institutions clearly need to have good partnerships with their regulators. Asheesh, when you think about the clients that you serve and any words of wisdom with regard to the relationship with regulators and how there could be a better perspective there, can you share that with the audience?
Yeah, so for us, we work with our clients, with our banking customers. We go to regulators. We show them the benefits of the technology, including improving anti-money laundering, using technology to improve anti-money laundering. And so if you have those conversations together, with the regulators, I think that you'll see a positive outcome. It's when you try to skirt regulations like so many early in the blockchain space try to do, those are going to have bad outcomes. I think the one thing in the United States that has hampered adoption of cryptocurrencies is, the regulators have said, listen, don't break the law, don't break the speed limit, but they haven't provided the speed limit. So it's, this middle ground of, you don't really know what to do. And so it's a little stagnant in the United States. I think Asia, again, has a really good model of, drafting, sample regulation, getting the partners, fintechs and banks to come together and participate, and then putting out a more favorable regulation that works for a lot of players, both incumbents and new guys as well.
All right, so Christian, I'm going to drag you back into it. So I'm staring right in front of us. It says driving shared prosperity. I'm thinking about the reinvention of financial services that we've been trying to talk about. I'm thinking about less wealthy. I'm thinking about underbanked. How can technology help? How can technology help close these gaps?
I think it already is, right? I mean, there's 700 million less underbanked just the last 5 years. So there was around 2 billion underbanked, and now it's around 1.3 billion. So I think it's helping at a very, very rapid speed. I think it's almost like in two dimensions, right? I think in the next 10 years, every citizen in this world is probably going to have some access to some kind of bank or payment service because it's moving that fast. And I think the other thing that's happening is that most of the things we do in our daily lives or in our businesses will become digital assets, right? And I think both things will change access to finance, access to lending. It used to be very, very hard to come up with collateral as a business to get a loan. But with full digital transactions and relationships and transparency and trade flows, that's much, much easier because you can sort of build the trust chain all the way through, right? Mm-hmm. So I think access is sort of coming, and I think, again, China is a really good case, right? I mean, as I said, when the guy on the street who needs money is holding up a QR code, you have an idea of how far you can go with that.
All right, so Johnny, if I can turn back to you, and again, staying away from Wells, but again, I lived this myself at my prior organization at B of A. When we think about leadership at the top, leadership of a CEO running a mega bank, this is the first time I've heard it, and maybe I'm wrong on this, but I've heard the concept of actually having a tech-oriented individual potentially leading one of our major financial bank institutions. You sit in an outstanding seat. You see a lot. I've humbly seen the little. Very complicated. Big banks are very, very complicated. What's your perspective with regard to the value of having a pure play tech CEO versus what I've observed to be the model, which is influential financial CEO partnered with a tech expert and or executive at his or her side? Yeah,
I think most people think of a tech expert as somebody who comes up the engineering and development side of things, and I don't think that necessarily leads to the perfect leader for a large banking organization. But I do think that this generation and ensuing generations are going to be populated by people who are comfortable with it, fluent enough, certainly around the way that technology is impacting the business, the threats that we've talked about, which are next-gen threats compared to how people in banking historically would have thought about, just the credit risk, market risk, financial risks, et cetera, around banks. Now you really have business models disruption, which is as we've talked about in different jurisdictions, is more or less a threat than it ever was. And so both leaders and boards should be confident in that. I also think a real familiarity with what's happening with data science, et cetera, is something that fluency is going to be a requirement, not just for leaders of large banks, but any global institution. And that, to me, that is a technology savvy executive, not necessarily who comes up just through the technology chain, but it certainly would position somebody to be more successful.
All right, so I think our shot clock, if I'm not blinded by the light, says that we have about 8 more minutes. So should we open it up to the audience to see if the audience has any questions for our panelists?
Right in the middle of the front row.
Christian, so it sounds like you're a bit negative on blockchain, cryptocurrency, as it relates to friction in payments. Can you talk a little bit about what you're excited about with blockchain and cryptocurrency?
Yeah, maybe just one piece of background. I was part of the team who developed SEPA, which is the Single European Payment Area and interbank system in Europe. So from the scale and cost perspective, I think what I'm excited about, and I think all technologies take a lot of time to mature. I'm very excited about where this technology set will probably be in 5 to 10 years. But I think we're still a long, long way off. And I think we have forgotten a very, very simple question: is where is the consumer customer in all of this? There is absolutely, and I know it's controversial, there are absolutely no mainstream demand for anything around this. There are people who use Bitcoin as a speculation vehicle or other currencies. I'm personally, on a private level, very grateful for Ripple, but it's not a sort of tool to do anything except maybe in remittances, right? So I think if you look at the future and where it can go, right, I think anything where you have multi-stakeholder problems, meaning you have, for instance, supply chains, you have the issue of verification, right? In China, you have foods. You want to know where they come from when you eat them, and you want to know who handled them. This is very, very complex problems to solve with today's compute power and compute platforms, because there's so many stakeholders stepping in and out of that process. So whenever you have a problem like that, I think this particular technology set will do well. But I also think if you know all of the legal players around such an ecosystem, it will take a while until they're all sort of participating. I think one of the challenges is also a lot of the words, they sound really good, like smart contracts sounds fantastic. We don't want smart contracts as opposed to stupid contracts. But the challenge is with smart contracts is they're absolute, right? So I mean, our current legal system has a lot of flexibility and leeway built in. There's a reason we interpret law. But if it's code, it's absolute, right? So I think those are some of the things we need to figure out. How do we build flexible systems? And I have a thesis that when we are done and we build in all of that flexibility, when we build in the ability to recover payments that gone to the wrong place and so on, we might end a place that looks and is as complex as what we have today, but we'll probably be in a little better technology stack. So that's sort of my view.
Excellent, thank you. Any other questions from the audience?
Hi. Hello, I'm Deidre Campbell with Edelman. We put out a ton of data on trust and financial services, and our recently released data shows that while innovations in financial services like crypto and blockchain are trusted among the affluent in the US, they're still distrusted severely globally. What do you see the trust journey for these technologies for more global populations?
Yeah, so I think one thing that the crypto industry has failed to do so far is take it to the folks that need it the most. And so, for example, in India, 1 billion new people will be banked for the very first time using cell phones. Now they have the opportunity to transact globally. But the education of what this technology can do in terms of remittances for that newly banked citizen has been lacking. And so I think that we've been trying programs, social giving programs, to help educate some of the more emerging markets, to how they can use this technology. But so far, it has pretty much been a developed world sort of thing, almost a Silicon Valley sort of thing so far. But we can do more to educate the rest of the world on what they can do with this technology.
Maybe I can add a B2B perspective as well, because many of us jump straight to the consumer kind of perspective. So we're finding that the first massive use case, and I concur a lot with what Christian was saying, is actually in the B2B side as opposed to the B2B side. So we have around 60% of the world's syndicated loans residing on our system. Somewhere around $12 trillion reside on that system. Wells Fargo, for example, is a huge customer of that. Now, the problem we have is that it's completely intransparent to each other. So JP Morgan can't see BAML, BAML can't see Wells Fargo, and they all use the same system. So what you can do with, in our case, an R3 quarter, and we agree blockchain is just a pipe, you consume it, we don't fabricate it. With a permission node, that allows JP Morgan to say to Bank of America, or Bank of America to say to Wells Fargo, hey, I can see your position, real time, all the time, because you've permissioned me. And that gets rid of settlement periods from 22 days down to a few hours. That gets rid of human error in terms of all of the complex loan instruments that sit behind a syndicated loan. But that's just step one, digital servicing. Where it will then allow you to go is securitization and tradability. If you think it through, and where Christian was kind of coaching us, this will allow us to free up trillions of trapped liquidity. This is a very, very big deal. You can do it in complex lending, and you can do it in trade finance, right? Where you need the trust. You don't know who you're trading with. So if you can leverage the blockchain for that trust and then securitize and then make tradable, well, maybe we can resolve the $1.6 trillion trade financing gap, and that would be good for society.
Any other questions from the crowd? All right, so just quickly, just for fun, quickly going down the row, when we think about digital currency, we think about crypto, will it ever be wildly accepted? A yes or a no, Asheesh?
Absolutely. I do agree that it's going to take a lot longer than we anticipate. I think the markets did get ahead of themselves there. But I think if regulation becomes clear, you will see rapid adoption of blockchain, but it might just be further out than we originally thought.
Regular currency will probably remain the mainstay as long as the United States exists, I would think.
No, I think it's hard to get euphoric about a technology, but you can get euphoric about a customer service. So hopefully that will be what excites the customers.
I think when the focus can be as the means of exchange rather than a store of value with wild price swings, which is what we've experienced for the last couple of years, it's easier to take it seriously. There are jurisdictions in the world where people need the ability to anonymously convert local currency to something harder and get it across borders and maybe even avoid detection. It'll probably thrive in those types of areas, but I think in this country it's going to be a long time.
Finally, Josh.
Yeah, I think the answer is yes. It's going to be fiat-pegged coins, essentially digital cash. It won't be the JP Morgan coin, but it'll be things similar to that coming from different financial institutions. The efficiency gains are just too great. If you look at it as a percentage of the entire FX market or payments market, it'll feel small, but I think there are a number of use cases where the penetration will be quite high in those niches.
All right. So with that, that's our hour. Thank you, guys. Thank you to the audience.
Thanks.
Thank you. Thank you.
Thank you for attending. Please make your way to the next session.